Hello, my name's Chris Marty, and I'm the Vice President of Data Analytics and Executive Education at the Metals Service Center Institute. I want to talk to you today about compliance as it relates to your chapter's finances. This is an area that's really critical to MSCI's chapter, and it's probably the biggest source of risk to your chapter, so it's important to get this right. What we're going to cover is why it's important to do the right things, and that's under the heading of fiduciary responsibility. And we're going to talk about some best practices as it relates to managing chapter finances, how you deal with bank accounts, what are some best practices in regard to dispersing funds and collecting funds. We'll talk about some other duties that your chapter has in relation to regulatory filings. And then finally, we'll talk about just some really common sense rules and how to think about managing chapter finances in the most appropriate way. Let's jump into fiduciary responsibility. Your board, collectively, your directors and your officers, owe fiduciary duties to the nonprofit organization that you serve. So in essence, exercising those duties means that board members have a duty to act with care and in the best interest of the nonprofit organization and remain loyal to its mission as opposed to their own or their company's interest. Board members have both a legal and ethical responsibility to oversee nonprofit organization and provide accountability. There are basically three categories of fiduciary duty. These are the duty of care, the duty of loyalty, and in some states, the duty to act in good faith. In terms of the duty of care, that means that board members should give reasonable care and attention to their responsibilities to provide the organization with oversight. And attention is the key word here. Although there are no precise rules as to what that means, it means at a minimum that board members should make every effort to attend board meetings, read board reports that are presented to them in advance or during the meeting, and have an understanding of the organization's finances. Critical point. The duty of loyalty means that board members are responsible to act in the interest of the nonprofit and those it serves. Those are your members. And those who are contributing funds for operations and for events and for golf outings and for scholarships. And again, to practice those routinely, to have written controls where possible, which is very important to minimize the risk to the organization. This includes your legal and regulatory filings, by the way. You have a duty to act in good faith, and the concept of good faith generally requires that directors act honestly and with faithfulness to the duties and obligations that we just talked about, and not attempt to take advantage of the corporation. If someone is not acting in good faith, and if that director or officer has proven not to be trustworthy, and you have knowledge concerning the matter in question that makes reliance on that person unwarranted, you have a duty to speak up. You shouldn't remain silent. Board members have responsibilities and potential liabilities, and proper education on the specifics of these duties will provide you with peace of mind, reduce the risk to the organization, and lower the risk to you in terms of personal liability. I would recommend that you access the slideshow, narrated slideshow on chapter governance by MSCI's General Counsel Mark McCarrans as a way to understand more deeply the roles and responsibilities of chapter board members by type: president, vice president, treasurer, general secretary, and so on, so that you have a deeper understanding of where the fiduciary responsibilities come from. So let's now jump into some best practices in regard to chapter finances. Now that we've covered the why, let's talk about the what. These are best practices that every chapter board should employ, and these are starting at a higher level. We'll dive down a little more deeply in a minute. But in regard to chapter bank accounts, chapters should always have more than one board member with access to the bank account. This should be a principle that's inviolate for chapter boards. You really need to have at least two people with access to the account, and that means access in all of the ways that your bank allows access to chapter personnel. You're going to have signature cards that anyone with access is going to have to sign. You're going to want to make sure that more than one individual has access to the paper bank statements. You should probably have bank statements sent to more than one person by the bank. If there is phone access, if there is online access, please make sure that more than one person has the capability to find out what's going on with the chapter bank account. This is of utmost importance. Probably won't come into play, but when you need it, you need it. It's important to have that. So you will need to have a process set up with your bank that requires 2 signatures or more, or approvals to disperse funds. That means that, again, you'll have to create signature cards for more than one person and have them on file at the bank. It means that anytime you write a check, anytime you do an electronic transfer, if in fact you allow electronic transfers, which I would suggest probably isn't a good idea for a chapter, that you maintain a process whereby 2 chapter board members need to approve checks or transfers, and that there's an appropriate separation of duties, which is probably inconvenient, but is very much in the best interest of a well-run chapter. This simply avoids the appearance of impropriety and helps make sure that the risk of having only one person involved is as reduced as possible. Another thing that you need to do is reconcile your bank account in a timely manner. That means every month. According to the Uniform Commercial Code, you only have 30 days within which to reconcile your bank account, and then contact your bank assuming there are any improprieties or errors in the account that you need to have addressed. After 30 days, those become your responsibility, not the responsibility of the bank. Before 30 days lapses, they're the bank's responsibility. So reconciling your bank account between 0 and 30 days from when you receive your bank statement is a really good idea. Please follow that. That's highly recommended. That allows you to catch any errors, any improprieties very quickly, and it allows you to notify the bank and, probably as important, any of your or all of your other board members immediately when those errors or improprieties are caught. So not taking these actions is risky, and it's highly recommended that chapters follow those best practices at minimum. Let's talk about how funds get into your bank account and how you can help make that both more efficient, more accurate, and frankly less risky. Most chapters collect funds using checks and manual checks. Some even will accept cash. It's important, again, to have 2 people involved in all of these processes. For the same reasons that it's important that 2 people are involved in dispersing funds, it's important that 2 people, at minimum, are involved in collecting funds. Folks involved in that process should keep records that are detailed, meaning when you collect money, why was it collected, who sent the money, which individuals, which companies in particular, what are the dollar amounts, and what dates was that money sent, or what dates were the check written and deposited. So these records, these detailed records of funds collection should be kept separate from your bank statement. This allows you to go back and correct any errors in the bank account, make sure that the bank is correctly accounting for your deposits, and make sure that you don't have a problem in between the time the funds are collected and the funds appear in your bank account. So once again, reconcile the bank account and keep a separate record of funds collected. A lot of chapters are now interested, because it's available and inexpensive, to get away from using paper checks and collecting funds that way, funds for golf outings, funds for meeting registration, and using credit card payments online. You can collect credit card payments manually, but it's not suggested. It is fraught with legal and regulatory risk. Credit card processors may, in fact, object to a chapter maintaining credit card records from its members. There are ways to collect credit card payments online that are both efficient, accurate, less work for the chapter, and enable the chapter to collect funds using credit cards with much less risk. Those are third-party credit card or payment processors that allow for the collection of member and individual credit card payments that are then deposited directly into your bank account. Credit card processors like you to follow what's called PCI compliance. You can use Google to look up PCI compliance, but it is the recommended processor's way of handling credit card payments, which in turn allows the chapter not to have access to a member or a member company's credit card data. That's critical. That alone can relieve you of a lot of the risk of processing payments. It's also more reliable and accurate, and it's definitely PCI compliant and will allow you to rest easy when you're collecting funds for your events and your golf outings. I would recommend here that you access and listen to the slideshow on chapter technology. MSCI's Executive Director of Technology, Ryan Hippis, goes into a lot more detail on the types of companies that can process credit card payments for chapters. They can actually manage your registration process for you in one fell swoop. You can register people for your events and collect their payments in a risk-free, or at least much less risky, manner that's much more efficient and less time-consuming for the chapter. There are also third-party companies that will manage your chapter funds collection without involving chapter personnel. You have to establish a legal relationship with those companies. One company in particular has that kind of relationship with a number of MSCI chapters. That company is called 24/7 Office Express. If you're interested in taking advantage of that kind of company and their capabilities, please talk to your chapter liaison. So let's talk about reporting and who's doing the managing of chapter funds in particular. It's really important that chapters rotate the folks that are involved in these processes on a regular basis. And when we say rotate, we mean that those people who fill the positions of chapter treasurer, chapter president, chapter secretary, or anyone involved in the collection or disbursements of funds, there should be a time limit on their participation in that activity. We recommend, and standard practice at MSCI is typically 2 years. People shouldn't be left in those positions for a long, long time. They should be rotated, and new sets of eyes should come in and take a look at what's going on, make sure the processes are not only less risky but as accurate as possible, being followed according to the best practices that are being recommended here. So having a standard rotation of chapter board members and chapter officer positions is highly recommended. Also, in terms of who is in the treasurer's position at any given time, that person should be preparing formal and written presentations to the board at every chapter board meeting. That means, what are the sources of the chapter's funds? What are the uses of those funds? Who are you collecting from? And who are you paying? In other words, this is really preparing a profit and loss statement for the chapter. In essence, keeping track of what's in the bank account, where that money is deposited from, and from what events or what purpose, what operations, and again, where the money is going to, who are you paying, and why are you paying them, which also would include the bank balance. Most chapters keep tabs on the amount of money that they have in their bank accounts, and that would be likened to an asset and liability statement or a balance sheet for any other entity. So it's important that you rotate chapter officers and that you do regular financial reporting at chapter board meetings. One more detail. It's important that a chapter stay timely and file its Irs Tax Return, which is called a Form 990, every year, year in and year out. This form, according to IRS regulations, is due on the 15th of May every year. You can hire outside counsel or outside accountants to do this, but the form is simple, easy to prepare, especially if you're the chapter treasurer, and it should be done every year on time. The same with any state filings that you're aware that you need to file with the state in which your chapter is domiciled. If the Central States chapter located in Chicago, that would be the state of Illinois, for example. So these things vary by state. You need to check with your chapter counsel to make sure that you're filing all of the state documents that you need to file every year. And once again, they need to be filed on a timely basis. Failure to comply with legal and regulatory filings on time and every year can result in the loss of your chapter's nonprofit status or your state incorporation. And let's just say this, the bottom line is it's far easier and less expensive to stay up to date with legal and regulatory filings than it is to let them lapse and have to make it up. There have been chapters in my experience that have let those lapse, and it can take a long time and it can cost a lot of money to reinstate a chapter. So please do that on a timely basis. So, bottom line, you should rely on your chapter legal counsel if you have any questions about any of the material and the content that we've just talked about. Your chapter legal counsel is someone you can rely on to get it right in that regard. You can also talk to your chapter liaison if you have questions about what typical chapters do, and the liaison can provide a source for you for best practices of other MSCI chapters. But really what's important here is that you think about and you evaluate the potential risks that your chapter faces when it comes to managing your finances. Everything we've talked about today is a common sense rule. Having two people involved in the collection and disbursement of funds, having two people who have access to the chapter bank accounts at any given time, making sure that you're up to date on your legal and regulatory filings, doing your best to minimize the risk of accepting payments. All of these things are just common sense rules that you can employ, and so that as a chapter board member, you can feel comfortable in the role. You can sleep at night, not worry about undue risk to the chapter or to you as a board member, and be able to manage the chapter for the benefit of the members themselves. A well-run chapter is a happy chapter. So let us know if you have any questions. Contact your chapter liaison, and thank you for listening today.